The gold market once again gained attention in the previous days, performing some interesting moves. This week's report will be bringing to light the possible reasons of the recent price action by the precious metal, as we attempt to gain more knowledge on the subjects that energize traders. Our research will also include upcoming economic data that could create opportunities for traders in the following days. Overall, we aim at producing a formal and detailed report for the traders to have a better understanding of the current circumstances, and along with our technical analysis, we seem to cover for gold on both price activity and fundamental fronts. One of the most important economic data that was released in the previous week was closely related to the gold market, something that we had noted in our last report. According to the figures released last week, US inflation data surged to its highest in nearly 13 years, with consumer prices rising in May by 5% from a year ago. Gold, one of the best instruments to use against higher inflation, reacted positively to the higher than expected readings, moving in accordance with the outcome. On the 10th of June, when the US inflation data was released, gold surged and briefly reached $1,900 for the second time in June. Based on the Fed predictions, inflationary pressures could rise temporarily this year. This, in our opinion, is an indication that the Fed is not really worried over the figures being at multi-year highs, which in our opinion limits gold's value due to a hypothetical correction in the rates possibly being priced in. Yet, on the contrary, every action has its reaction, and a continuous rise of inflation could force the central bank to tighten its easy monetary policies earlier than expected, which could force gold traders to take into consideration the change of the stance. An indication of a rate hike before 2023 could, in our point of view, strengthen the USD and weaken gold. This may have supported the greenback in the previous days, and the need for gold to hedge inflation could be reversed and seen obsolete in this scenario. This is a major expectation for the upcoming FOMC meeting that takes place between the 15th and 16th of June in the US session. On the 16th, the meeting will follow up as an interest rate decision, the accompanying statement, and a press conference, with the Fed Chair Jerome Powell giving his views of the central bank. This event is extremely interesting due to officials being set to release updated projections, which could create volatility for many markets, including gold. Caution is advised, as the event can create waves of volatility for gold's price, thus traders should take extra care when engaging the market. Other events in the following days that traders can use as guidance for further price action of gold is the weekly initial jobless claims figure, which is expected to drop to a new pandemic low, and the Philly Fed Business Index reading for June, both to be released on the 17th of June. Finally, on the 22nd of June, we get the US existing home sales for May. In our view, the market has been event-driven in the past weeks and can produce volatility under certain circumstances. We could dare to say the market is rather sluggish and inactive at the moment. The pre-mentioned view should be used with caution, as the momentum could change unexpectedly. Moving now to our technical analysis and goals for our chart. At the moment, gold is trading nearby 1865 approximately. The most recent level from our technical analysis that has been tested is the S1, 1845 support, which we noted mostly because of some attempts of that line back in May, when it was used as both a support and resistance. Other levels we have noted, even lower than the S1, is the S2 1828 line and the S3 1810 barrier. Both our S2 and S3 were last seen during the first half of May, which from then on the precious metal has traded higher. Moving to our first resistance, we have placed the R1 1877 line, as the move to the upside is equally possible. Even higher, the R2 1900 resistance, which was tested numerous times in the past week, is imminent. Yet at the top, the R3 1915 level is also looming and was last seen on the first day of June. In the past 3 weeks, gold has moved lower consecutively, but has not reversed the weekly upward trend formed since March. In our opinion, the trend for gold is upwards, yet some sideways tendencies may prevail also. As for the recent selling of the metal, the RSI indicator below our chart is seemingly rebounding off the third level, possibly implying some stabilization for the time being. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. For everyone here at IronFX, best wishes for solid trading.